Good day Forex trader. Your USD Forex signal, US consumer confidence, Fed in focus. The pair will likely keep falling as bears target the next key support level at 1.1240. Bearish view. Sell the Euro USD pair and set a take profit at 1.1240. Add a stop loss at 1.1400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1350 and set a take profit at 1.1400. Add a stop loss at 1.1300. The Euro USD pair moved slightly below an important support level on Monday as investors reflected on the latest economic data and rising tensions between Russia and Western countries. The pair is trading at 1.1315 ahead of the upcoming US consumer confidence data scheduled for later today. Mixed US and Eurozone PMIs. On Monday, market published the latest flash manufacturing and services PMI numbers. According to the company, the Eurozone manufacturing PMI increased from 58.0 in December to 59.0 in January. This increase was better than the median estimate of 57.5. On the other hand, the closely watched services PMI declined from 53.3 in December to 51.2 in January. This drop helped to push the composite PMI from 53.3 to 52.4. Meanwhile, in the United States, the manufacturing and services PMIs declined to 55.0 and 50.9, respectively. These numbers show that the Omicron variant had a negative impact on the two economies in January. However, analysts expect that the situation will improve in the coming month as the impacts of the variant starts fading. The Euro/USD pair also declined because of the rising tensions between Western countries and Russia. Russia has accused the US and other Western countries of pushing Ukraine to join NATO. As a deterrence, Russia has pushed more than 100,000 troops near the Ukrainian border. There is a likelihood that the two sides could continue this conflict for a while after diplomacy options failed last week. Therefore, the pair declined because of the rising demand for the US dollar, which is often seen as a safe haven. Later today, the key catalyst for the Euro USD will be the latest consumer confidence data from the US. Due to inflation and the Omicron variant, analysts expect the data to show that confidence declined slightly in January. Euro USD forecast. The Euro USD pair has been in a bearish trend in the past few days. The pair has managed to drop by about 1.5% below the highest level last week. It managed to drop slightly below the ascending trend line that connects the lowest level since November last year. The 25-day and 50-day exponential moving averages, EMA. Also, the stochastic oscillator has moved slightly below the oversold level. Therefore, the pair will likely keep falling as bears target the next key support level at 1.1240. GBP USD Forex signal, sterling remains under pressure. The pair will likely keep falling as bears target the 23.6% Fibonacci retracement level at 1.3320. Bearish view. Sell the GBP USD and set a take profit at 1.3320. Add a stop loss at 1.3500. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3430 and a take profit at 1.3500. Add a stop loss at 1.3370. The GBP USD price sell-off accelerated after the relatively weak UK and US manufacturing and services PMI data. The pair declined to a low of 1.3450, which was the lowest level since January 3. It has fallen by over 2.25% below the highest level in January. US consumer confidence data. The GBP/USD pair declined sharply after the latest data by market showed the impact of the latest Omicron variant. The numbers showed that the UK manufacturing PMI declined from 57.9 in December to 56.9 in January. This decline was lower than the median estimate of 57.7. The same trend happened in the services sector. The services PMI declined from 53.1 to 51.2, which was the lowest level since 52.2. As a result, the composite PMI declined to 53.4. Meanwhile, the manufacturing and services sectors deteriorated in the United States. The two PMIs declined to 55.0 and 50.9, respectively. The numbers were weaker than the median estimate of 56.7 and 55.0, respectively. Still, there is a likelihood that the pair will start improving. For one, the UK has moved away from Plan B measures to contain the Omicron variant. In the US, Anthony Fauci has said that the Omicron variant may have peaked in the US. Later today, the GBP-USD pair will react to the latest American consumer confidence data. The data is expected to show that confidence declined to 111.8 in January from 115.8 in the previous month. This decline will likely be because of the rising consumer inflation. The pair will also react to the latest Federal Reserve interest rate decision that will come out on Wednesday. Analysts expect that the bank will slash its quantitative easing policy again and hint about rate hikes. GBP-USD forecast. The GBP-USD pair has been in a sharp downward trend in the past few weeks. Along the way, the pair has moved below the 50% Fibonacci retracement level. At the same time, the pair has moved below the 25-period and 50-period exponential moving averages, EMA. The stochastic oscillator and the relative strength index, RSI, have been falling. The price is along the lower side of the Bollinger Bands. Therefore, the pair will likely keep falling as bears target the 23.6% Fibonacci retracement level at 1.3320. AUD-USD Forex signal, consolidating between 0.7100 and 0.7170. The pair remains prone to sharp downwards price movement. Today's AUD-USD signals. Risk 0.75%. Trades may only be entered prior to 5 p.m. Tokyo time Wednesday. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7170 or 0.7188. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7102, 0.7083, or 0.7051. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD-USD analysis. I wrote on Monday last Tuesday that we had a pivotal resistance level at 0.7223 still in play. I thought that a bearish breakdown below approximately 0.7190 would complete a bearish head and shoulders candlestick pattern and suggest the price would continue to fall. This was a good call as the resistance at 0.7223 held firmly when it was reached, giving a profitable short trade opportunity. The technical picture has changed over the past few days, with risky assets, mostly stocks, making strong sell-offs before rebounding late yesterday. This risk-off then recovery movement was naturally replicated in the Australian dollar, which is a key risk barometer currency. We saw the price plunge then bounce strongly at the support level at 0.7102 confluent with the round number. There are clear, obvious resistance levels above, with the nearest being 0.7170, which held the price just a few hours ago. The price is now trading in the middle of this range and waiting for direction. Risky assets are looking weak and prone to further falls, due to worries over the Fed's tightening of monetary policy and the prospect of a military conflict between Russia and Ukraine. These fears are likely to determine whether the price eventually breaks below 0.7100 and continues to fall, or whether we start to see a gradual recovery and rise. I would be happy to take a short trade from another bearish rejection of 0.7170, or a long scalp trade from another bullish bounce at 0.7100, but such a scalp should be carefully monitored on a low time frame.